So today's conversation is going to be published on our YouTube channel, and it's been a few months since I've done an interview, so I'm super excited to dive into this conversation to chat about the Bitcoin space and some of the things you guys are doing at Unchained Capital. And the headlines all people are talking about is FTX. I'd like to start by zooming all the way back to 2014. We had Mt. Gox. It was a large Bitcoin exchange that got hacked, and 740,000 Bitcoin were stolen from customers. And at its peak in 2013, Mt. Gox consisted of something like 70% of all Bitcoin transactions worldwide, which is just wild to think about. So to have this exchange get hacked, it was just a really massive hit to Bitcoin in terms of the liquidity, because that's where a lot of people were buying it. And Bitcoin entered a bear market and went from 1,100 per coin to around 200. Then, ever since, I think people kind of took for granted trusting exchanges to take care of their Bitcoin. Some exchanges have got hacked since, but nothing near that size that we saw from Mt. Gox. But now in 2022, we have FTX going bust, hundreds of thousands of FTX users losing their money as a result. And now there's speculation that other exchanges might be getting into trouble as well, as more and more people are taking their coins off these exchanges. A lot of people are just learning the hard way that if you have your Bitcoin on an exchange, then you just own a claim to that Bitcoin and not the actual coins themselves. So I'd love to get just your overall reaction to the FTX debacle.
Yeah, so I want to highlight two very important things you just said. But first, to answer your question directly, I'm not surprised one bit by the FTX debacle. There's a good chance that we will see more crypto exchanges and crypto companies fail. And I'm careful to use, the term crypto companies and not Bitcoin companies, because Bitcoin companies and exchanges, tend to be a little more careful and not play the same type of games like rehypothecating funds or, providing yield. I also think that the, long-term best sustainable business model for those crypto exchanges is to become a Bitcoin only exchange. So we'll start there. But the first most important thing that I think you said there is that Bitcoin on an exchange is not actually Bitcoin. You have a claim to it. It's not the actual Bitcoin. So I've said that a lot. I know I'm not alone in this, but if you hold Bitcoin with an exchange or a custodian, you don't actually own any Bitcoin. What you have is an IOU. And in most cases, if you can remember the infamous Coinbase 10Q at the SEC, they said that if a bankruptcy occurs, that their customers are actually unsecured creditors. So in most cases, you're legally an unsecured creditor. The second thing that I wanted to touch on there that you said that's very important is that there's speculation that other exchanges may be in trouble. Yes, I would agree with that. I'd probably take it a step further and say that I think there are other, crypto exchanges, potentially hedge funds, crypto lenders, brokers, basically anyone that was caught up in that offering yield or taking custody of their client funds, like, Terra Luna, Celsius, BlockFi, FTX, Alameda, all of those guys. Anyone that has been doing that or will continue to do that, I think they are in trouble, or potentially could be in trouble.
Mm-hmm. I was thinking about this the other day. I think it's also really, really important that people have this reminder that it's so important to understand what it is you actually own. I know many people in my life who were, scared or worried about losing their coins. They held it on some exchange or some yield platform, and they ended up just selling it out for a loss. And then I know people on the other side who are like, heck, if the price is going to go below $20,000, I better average down and take advantage of that opportunity, and then just send those sats to cold storage. And when I think about those two groups of people in general, it's pretty clear to me who it is that's actually done the research, read the books, and then it's also pretty clear who is just acting on their emotions. And I was actually sifting through the book, The Bitcoin Standard, the other day by Saifedean Ammous, and every time I go through that book, I'm just amazed at how much good information is in there. If you're newer to Bitcoin in the audience or just interested in learning more about it, this is definitely a book that's a great primer for just getting a sense of why so many people are so passionate about Bitcoin.
Oh, yeah, absolutely. I think that's probably one of the highest recommended books that I give out to clients and to people that are interested in Bitcoin. Another one, if you wanted to take it a step further, if you're interested in the technical side of things, would be Mastering Bitcoin by Andreas Antonopoulos. That is one that you have to really have found yourself in the rabbit hole to enjoy, but it's my most read book for sure.
Now, I could imagine that a lot of people look at this situation and think that this is just a huge loss for Bitcoin. And from my perspective, I think this may actually potentially be a really good thing for Bitcoin in the long run for a number of reasons. First, I think it's a harsh reminder to people, again, that you need to be holding your own keys to your Bitcoin, because when more and more people take self-custody, it means that there's less paper Bitcoin or less fake Bitcoin, whatever you want to call it. I think I read that FTX had 0 Bitcoin, but they had $1.4 billion in Bitcoin liabilities that they owed to others. So essentially, if you were a user on their platform and you had, say, $10,000 of paper claims on their Bitcoin, well, they don't actually have what they say they have. And then the second reason is that I think it builds a much more sustainable future for Bitcoin as the frauds and the scammers are just washed out. And then companies that are responsible, that provide real value to the space, those companies are here to stay and they're going to continue to grow. And that's what I like about what you guys are doing at Unchained. And ironically, when bad and poorly run businesses fail, this ends up being a really good opportunity for those responsible companies to step in and fill the gap and fill in on those customer needs. So I'm curious if you agree with those points and agree that the FTX deal, as bad as it was for some people, is actually good for Bitcoin in the long run.
Yeah. So first, I'd say everything is good for Bitcoin in the long run, even if it seems like it's a bad thing when it happens. But second, this isn't the failure of any sort of decentralized system. It's not the failure of Bitcoin. It's the failure of a central custodian who mismanaged client funds. It's actually the exact same problem we face with any central organization trying to micromanage a complex system. So think of the Federal Reserve or central banking as a whole. The only way to fix something like this, from my perspective, is to get Bitcoin private keys into the hands of as many people as possible. And we can get into why I think that, why I believe Bitcoin will be the next global reserve currency. But when something like this, like the FTX failure of FTX happens, people tend to think like, oh my gosh, if institutions are losing people's Bitcoin, it must be so hard to custody this thing. But again, the problem isn't, the Bitcoin is too hard to self-custody. It's actually very easy to custody. If you look at the numbers, 21 million supply cap, we've mined about, 19 million. So there's 2 million left to be mined. About 12 million of those are already held in self-custody. 3 to 4 million are considered to be potentially lost. And only 2 to 3 million, that number's probably even lower now, are held on exchanges. So the problem is not that Bitcoin is hard to self-custody. The problem is that the business model of central banking does not work with Bitcoin. You can't play the same games like lending and paper IOUs and rehypothecation with an asset that settles with finality in 10 minutes or less. You just can't do it. And the last thing I'll say on that is, that be your own bank meme, that's not a meme. It's an actual option for 8 billion people. This financial system, this parallel financial system is already built out today. It's ready for people to use. And I think it's frustrating to see people lose their Bitcoin or what they thought was Bitcoin. But I think it's, more frustrating that people continue to trust these third parties that are incentivized to breach the trust of their customers.
That reminds me that just so many people are just conditioned to believe, if you're working with a large company, they have hundreds of millions or however many users. If something ends up happening to them, the government or the SEC is going to be there to look out for you. But people are beginning to realize that it's just not the reality with the crypto space. There's just so much that needs to be worked out from a regulatory standpoint. And I think a lot of people would say this is going to be a regulatory nightmare for Bitcoin. I'm curious what you think will come out of this situation from a regulatory standpoint.
Yeah, so that's a great question, and it's hard to tell. I don't claim to know what the future holds, but as it sits today, I know the CFTC and the SEC are fighting over regulatory oversight. Those are the two main bodies. Gary Gensler is the chairman of the SEC. He wants oversight. He believes that everything other than Bitcoin is currently, trading as an unregistered security. He's said publicly that Nakamoto's, meaning Satoshi Nakamoto's innovation is real, and the other 16,000 crypto projects are Dino or decentralized in name only. Now, I do strongly agree with him on that. I think that Bitcoin is the only sufficiently decentralized project. The other 16,000 they operate more like companies that issue shares, promising a return on investment. Kind of sounds like a security. But the other side of things would be the CFTC. They want oversight over crypto more broadly. That's who Sam Bankman-Fried, CEO of FTX, was working closely with. There's actually still a bill in front of Congress that SBF helped craft and heavily influenced. And CFTC having regulatory control over crypto would kind of be more lax from a regulatory standpoint on the broader crypto space, would maybe classify more things as commodities, which would mean, that they would be handled the way that I believe Bitcoin should be handled. But, I would normally say, and I'm a very big proponent, advocate for free markets. I would normally say, let the market decide and, let chips fall where they may. But there are, legitimate Ponzi's out here hiring celebrities to trick people into buying snake oil. And I think a little regulation might be good for the space. I tend to agree a little bit more with what the SEC is saying than the CFTC.
That's really interesting. I'd like to transition to chat more specifically about Unchained. The FTX deal obviously highlights the importance of actually holding your own Bitcoin because you don't have to trust anyone else to take care of those coins for you. And I think about how many people might not, many people might want to own Bitcoin, but they don't want to take this process of understanding how you actually take self-custody, what you can do, what you can't do. It just seems so easy to mess up if you're not a technical person and you don't really understand what you're doing or how it works or the back end of it. Maybe someone didn't grow up in the digital age like you and I did. And I think that's totally understandable from my perspective because not everyone is going to be comfortable with these things from a technical perspective. So thankfully, we have companies like you guys at Unchained who is really the gold standard when it comes to self-custody. So talk to the audience about what you guys do, what Unchained does, for those who might not be familiar.
Yeah. So first, I totally agree with what you just said. We try to make multi-sig and self-custody approachable for everyone. And we've been very successful in doing so, creating a system or creating a service that eliminates all single points of failure and removes that counterparty risk that we were just talking about. On Unchained Capital, we're a Bitcoin native financial service provider. You can go to unchained.com, set up an account, and you can set up your own 2 of 3 multi-signature wallet for individuals. Set it up yourself. It's completely free. And it's free because, multi-sig is native to the Bitcoin protocol. So we don't really think it's fair to charge for something like that as a service itself. But we do also offer the same 2 of 3 multi-sig wallet setups for businesses, for trusts, for retirement accounts. We have a trading desk. We do Bitcoin collateralized loans, Bitcoin retirement accounts, and we recently just launched an inheritance protocol. So we'll walk you through those steps to set up your Bitcoin inheritance plan and make sure that your loved ones have possession and title over your Bitcoin if something was to happen to you. And I was going to mention here, Preston recorded a podcast that I think would be really good to shout out right here on the Bitcoin fundamentals with Phil Geiger and Jeff Andrew, because they go through and break down the difference between possession and title, the benefits of having an inheritance plan. They touch on the retirement product, and I wouldn't be able to do it the same justice. So I think that it would be cool just to kind of, point people that direction as well. But to answer the last bit there, what I do at Unchained, and this is kind of the final thing that I haven't touched on, is I'm on the concierge onboarding team. So at a very high level, we teach clients how to take custody of their Bitcoin. This includes setting up devices, constructing multi-sig wallets, going through operational security best practices, continued education. We do webinars, tutorials, we do all kinds of stuff. And the main objective of my team, of the concierge onboarding team, is just to, create an environment to secure your Bitcoin that has 0 single points of failure and no counterparty risk.
I'm really glad you mentioned that episode that Preston did. It was episode BTC 108 on the We Study Billionaires podcast feed. I'll be sure to get that linked in the description below. That also reminds me that I talked with your colleague, Tyler Campbell from the Concierge team a few months back on our Millennial Investing show. And that episode is a good deep dive into self-custody, why it's important if anyone is interested in checking out that episode as well. I'm
Definitely
curious.
check that one out.
Yeah.
Tyler Campbell is just an absolute whiz when it comes to Bitcoin technicals. He's my go-to when there's something it's a little too technical of a deep dive. I go to him, and Tom and Carl. I mean, the entire team is just fantastic. And Phil's been our managing director for a long time. He's kind of shifted more recently into kind of leading the charge for some marketing and some initiatives that we're working on. But he's still very much, I'll always look at him as our original managing director. He made a comment there that sticks out to me all the time. So in that Bitcoin fundamentals episode that we were just referring to, and he said to Preston that whether or not people know it, their biggest fear is not necessarily the technology, but it's the potential of having a single point of failure. And that is so true, because people do not want to hold or custody their Bitcoin. They want to trust a custodian because they think they're going to lose it, or they think they're going to do something. You hear about somebody losing all of their Bitcoin because their seed phrase was typed into a computer, or you hear about the Bitcoin that's lost in a dump. Well, it's a private key that wasn't backed up properly that's lost in a dump. It's not somebody's Bitcoin. That Bitcoin's still on the Bitcoin blockchain, but the way to access it is now gone. So that's what we do. That's what we teach people. And I think it's really important to hammer that home, is that we teach people how to hold your private keys without single points of failure, so that if you do lose a device, you lose a seed phrase, you lose multiple pieces of your setup, your Bitcoin is still there on the Bitcoin blockchain in your address, and we can show you how to gain access to it again.
You mentioned before I hit record that you kind of niched down on who you help with the onboarding process. Maybe you could talk about some of the typical clients Unchained as a whole works with in terms of onboarding for self-custody.
I'd say there's not really a typical client. We onboard all types of individuals and organizations. So you'll get your hardcore Bitcoiner who has 99% plus of their net worth in Bitcoin, and they just want to eliminate the single points of failures that we're talking about. We also get individuals and companies that come to us that want to purchase Bitcoin for the first time, but they want to set up an environment that is more secure than just a single device, no counterparty risk compared to custodians. So they'll come to us and say, hey, we want to build this multi-sig vault that we hear about on the Investors Podcast. Let's set that up first, and then we're going to purchase some Bitcoin and put it in there. So we really, have various products that bring all different types of clients. Lending will be somebody wants to take out a Bitcoin collateralized loan to start a business or purchase a house. Businesses want to tap into their Bitcoin reserves, like mining companies, to free up some working capital to purchase more ASICs. Usually that's the type of lending product client that we get. And then our retirement product brings a whole different group of individuals and as well. And that would be, somebody in their mid-20s just trying to start off and build a tax advantage Bitcoin account, or somebody that is already of retirement age and they have a 401k from an old job. They want to sweep that whole thing over to Bitcoin and start taking distributions right away. So not one specific kind. I guess we kind of cater to the broad spectrum of anybody that's interested in Bitcoin and holding the keys themselves.
I find Unchained's business really interesting because Bitcoin's price is obviously very volatile. And then you have these things like FTX. I can just imagine it being so difficult to weather through that volatility, because you might have some months where you're just swamped with people wanting to come in and take self-custody. And then some months where, people just aren't as interested in Bitcoin. So you might have a little bit less business until the price picks back up. And that's one of the things I would think is just so difficult when it comes to running a Bitcoin type company.
Yeah, you mentioned, the price of Bitcoin is volatile. Inbound clients or consultations or people interested is also volatile. But what's interesting is that we have been in this almost 12-month sustained bear market. And this year, compared to 2021, with that raging bull market, we were actually up across the board, close to 90% with most of our metrics. Okay, so that's like new clients coming on board, people that are interested in custodying their Bitcoin. We've gotten a lot of clients coming over from competitors even. So it's proven the business model that we have perfectly. That self-custody, we can't move our clients' Bitcoin for any reason. There's no counterparty, all the things that we've already covered. It's really validated that piece of our business model. And even if the price is low and trending sideways, interest and self-custody is still at all-time highs.
As many people know, a lot of people in the Bitcoin space are outspoken against other cryptocurrencies, and Unchained is a Bitcoin focused and Bitcoin only company. And I just look at a company like, take Coinbase, for example. They're an exchange. And when I look at their incentive structure, one would assume that if Coinbase wants to make a lot of money in the short run, at least they should, just list as many tokens as possible and encourage people to trade in and out of this stuff. Because every single trade that happens, they're getting a fee and they're getting a spread off of those trades. So in order to make a ton of money today, companies are somewhat incentivized to list a lot of the coins rather than just the top ones or maybe just Bitcoin. So maybe you could paint some color around why Unchained decided to go this route of only supporting Bitcoin.
Yeah. So first, there is priorities, right? So if you're spreading your priorities across multiple projects, unless you've doubled your engineering team, that means that their priorities are now split among two completely separate, completely different things. And we used to support Ethereum. So I don't know if a lot of your listeners know this. Parker talked about it recently on another podcast. And I think that it is important to highlight that early on when we started, we tried to support Ethereum, I should say, and it was just a total disaster. So there's a couple of things there. Not only is it nearly impossible to run a full node, a full Ethereum node, you have to outsource that. But we had to write our own multi-sig script on top of ETH, which made it proprietary, which made Unchained a single point of failure. Okay. So remember I said multi-sig, Bitcoin multi-sig is not anything that we did special. It's native to the protocol. That means that if Unchained disappeared tomorrow, you can take your wallet configuration file, your XPubs, derivation paths, you bring them over to something like Sparrow or Caravan or Electrum, and you can interact with your Bitcoin again. There aren't many, if any, other companies that are using the same Ethereum multi-sig scripts. So those are proprietary. Companies running them are single points of failure. So that's pretty much the main point that I wanted to drive home. But the last thing that I'll say on that is the future of Bitcoin depends on its ability to not change. So to prove itself as the best form of money that we've ever had, all the metrics that we know about it, the 21 million supply cap, 10-minute blocks, 2-week difficulty adjustment, no one can change anything about it. It's entirely opt-in, opt-out. So it's the beauty of Bitcoin. If it stays the same, it succeeds. The future of crypto, the other 16,000, depends on, more tokens being created and traded on top of Ethereum to prop up the trading fees, or new blockchains, to your point, just being created out of thin air and dropped on an exchange. And historically, that looks more like exit liquidity for people that were early to those tokens. So we compared the two. I've compared the two personally. I know what I think is going to be around in 10, 20, 500 years. And I do not believe, this is just a personal opinion of mine, I don't believe that we need multiple blockchains. I think the blockchain was invented to solve the issues that we have with other forms of money. It's the invention of triple entry accounting. It's a voluntary, fully transparent, fully auditable public ledger. I believe it's money. It's what Satoshi set out to create, and he was successful. And as far as I'm concerned, the other 16, 20,000 projects that are out there are acting as a test net for what can and is and will be built on top of Bitcoin if it proves to be valuable.
What I really like about that is you aren't trying to maximize for the dollar. You're actually looking out for your customer's best interests. And I think a lot of people, they'll pull up their exchange app. They'll say, hey, they'll look 5 tokens down and you have whatever coin listed. That one might be down 95% from its high. And the exchange could really care less that someone was misled to believe that, hey, maybe this coin's as good as Bitcoin, or maybe the viability of it long-term is as good as Bitcoin, which we all know isn't true. But you guys actually believe that Bitcoin is here to stay, and you're out to, try and look out for what you believe is in your customer's best interest.
Yeah, you're absolutely right there. You're spot on. And we have prioritized for the long term. We have a very low time preference as a company. And as individuals that come to Unchained, we're Bitcoiners first. And then, we want to see this project and this company succeed. And the way to do that is to keep the long-term, slow growth, don't break anything, make it as secure, and build the foundation out as strong as possible above everything else. And that does mean turning down the wrong kind of investors that want us to add a yield product or want us to do something that goes against the ethos of Unchained and of Bitcoin. And again, with FTX and Celsius and all this stuff that's been blowing up this year, we've hunkered down. We've looked at our product. We've decided to just continue building out the system that that Joe and Drew created in 2016. And not much has changed other than this has become a much more strong, secure, robust infrastructure that we're building on top of now. And we've done that by having an incredibly low time preference.
I have a point I'd like to expand on there. On Unchained's website, it says, "We expect our clients to hold Bitcoin for life. Our services are built with this in mind, including collaborative custody, retirement, and inheritance." And I just really like how this is included on the site because we live in such a short-term minded world. A lot of people think of Bitcoin as a trade that they're simply just trying to get rich quick on. Maybe you could expand on that concept of holding Bitcoin for life, or at least having that mindset of not really caring too much about that short-term performance. And maybe you could touch on what it took for you to get to that point and adopt that mindset.
I'd say as a company, we view Bitcoin as multi-generational wealth. We believe that it'll be the next global reserve currency. And we also believe the banking system will become a network of private keys held in collaborative custody. Okay. So that is something that we've decided to really peg to or anchor to moving into the future. And we've designed all of our products and services around this. As an individual, I also believe Bitcoin will be the next global reserve currency. I also view it as a way to, like currently today, a way that I store my productivity. It's a tool for saving for me, and I don't trade it, and I rarely spend it. If I do spend it, it's paying somebody back for dinner or drinks, or buying pupusas in El Salvador using the Lightning Network, which is a good way to spend Bitcoin. But I know that it's there if I ever need it. So it's this long-term savings plan. I plan on passing it down to my daughter and to other kids, to my grandchildren, right? But I know it's there. So one thing that I like to say about Bitcoin is that it's not a get-rich-quick scheme like we see in a lot of other areas. It's a build wealth slowly plan. And it took me probably about 3 months to realize that when I first got introduced to crypto through, it was one of the Bitcoin forks, the Charlie Lee coin. My buddy introduced me to that. That's exactly right. I didn't want to say it. No, I'm just kidding. No, this is something I'm very public and vocal about because I did get introduced to crypto. I thought that Litecoin was the next Bitcoin. I thought that the scaling was such a big deal, that decentralization didn't matter. Bigger blocks, that could be a good idea. I went through on all those avenues. I was reading all the white papers. I owned a couple dozen of these crypto tokens at one point. And then I started to do my research, really dig into what the innovations were with Bitcoin and where the security comes from. How can you stop it? How can it fail? And once I had that aha moment that Bitcoin is the innovation, the other stuff is, either forks or copy and paste versions of it that are claiming to do things that you can still do with Bitcoin. But once I had that aha moment, that's when I made that realization that, oh my gosh, this is the most important project from my perspective that we can be working on at this point in history. Money is 50% of every transaction. The money is broken. We know that. So 50% of every transaction that occurs globally is something that is not sustainable. It is fundamentally broken. And there's a couple of things that I really like to think about with this, and then I'll pass it back to you. But on my comment that we think Bitcoin's going to be the next global reserve currency, I always think back Parker Lewis has two really good points on this. And the first one is something like, historically monetary systems tend to converge to a single medium. There's not typically more than one global reserve currency. That's the point. So tends to trend and converge on the strongest form of money. The other thing is the value of a currency itself trends towards the cost to produce it. So you can't print energy out of thin air. So that means you can't print more Bitcoin. You can change the code if you want. You can create more Bitcoin, but everyone else running the actual Bitcoin network, no, there's never going to be more than 21 million, and you can't actually create any out of thin air. You have to mine it. You have to trade electricity. You have to sell your hash rate to a mining pool. In return, they give you Bitcoin. Dollars, however, have no limit, right? Any fiat currency has no limit. Nobody actually knows the supply. Stocks, bonds, gold, no one knows the total supply of any of that stuff. You can audit Bitcoin, So from characteristics of money and what a strong money is perspective, Bitcoin wins, beats everything out, like hands down, no questions asked. And if historically the monetary system tends to converge on a single medium, and that's the hardest form of money, then I believe, and a lot of people believe for those reasons, that Bitcoin will be the next global reserve currency.
One thing that stuck out to me there, I first got introduced to crypto and Bitcoin in 2017. I was just coming out of college at the time and pretty new to investing, and I saw all these coins just going straight up into the moon. And you mentioned Charlie Lee's coin, and I think that the talking point around that time, for Litecoin is Litecoin being the silver to Bitcoin's gold, meaning that Litecoin's going to be good at transactions and Bitcoin's going to be good at the store value aspect. And just thinking back at that now, 5-6 years later, it's almost laughable. Now you have things like the Lightning Network on Bitcoin, and it starts to make a lot more sense when you start to do your research and learn from these really educated people in the space. And going through a cycle or two and, just learning as much as you can from podcasts and articles and books and such.
Yeah, I think you're spot on there. And I was hoping you're going to mention the Lightning Network, because that is what disrupted the narrative around silver to Bitcoin's gold, because that was exactly what I thought. Smaller market cap, it's going to, increase in USD. And this is, you think in USD terms when you're looking at the rest of the crypto space. What's going to pump harder than Bitcoin? That's what, a lot of these, I would say most of these traders and, altcoin enthusiasts do, is how do I find something that's going to pump harder than Bitcoin that I can convert back into US dollars? But Bitcoin, if you're looking at Bitcoin as your long-term money, you can see that just like TCP/IP is the base layer of the internet, BTC/LN, Bitcoin Lightning Network, is the base layer of the Internet of Value. And the Lightning Network is the payments rail that is built on top of Bitcoin. And the transactions per second on the Lightning Network is exponentially higher than any of the other cryptos, especially Litecoin. So that argument was a very attractive argument back in 2017. And I remember that perfectly. But it doesn't hold any water anymore.
Turning back to Unchained, when I think about your guys' company, I immediately think of the Multi-Sig product that you guys have. You discussed this with Stig in your previous episode with him on our YouTube channel, but maybe you could talk about the Multi-Sig product you guys have for those who missed that episode, what Multi-Sig is, and why it's the solution you guys went with when it came to helping people out with self-custody.
At a very high level, Multi-Sig or multiple signature is the only way that you can truly eliminate the single points of failure that we were talking about when it comes to Bitcoin. So to understand multi-sig, multiple signature, we need to kind of think about what a signature is and why it's important. So I'd be happy to break that down. But to understand a signature, and this is where things can be complex, I'll try to keep it very high level. So to understand what a signature is, we really need to understand where Bitcoin lives. So where does Bitcoin live? It doesn't live on an exchange or on your Trezor or Cold Card. It was never on FTX or Mt. Gox. All Bitcoin live on the Bitcoin blockchain in an address. Addresses are constructed using public keys. Bitcoin can be unlocked from these addresses using private keys. So you could think of a public key as information that's like a lock. A public key is used to create an address. Address is where your Bitcoin lives. A private key is what you use to unlock Bitcoin from those addresses. And the way that a private key unlocks Bitcoin from an address is by providing a signature or permission to move the Bitcoin from one address to another. Mm-hmm. So multi-sig, multiple signature, and a multi-sig address is constructed using two or more public keys, where a certain number of signatures from the corresponding private keys are needed to unlock the Bitcoin. Okay. So multi-sig is just an environment where your Bitcoin lives that needs multiple signatures or permissions from the private keys to move it out of that address or out of that environment. At Unchained, what we use are the 2 of 3 multi-sig addresses. So this means addresses built using 3 keys. Our clients have 2 keys. We have 1 key, and any 2 keys can move the Bitcoin. So clients can move the Bitcoin on their own, full unilateral control over their Bitcoin. Or if one of the keys or seed phrases becomes compromised, we can provide one of the signatures needed to move Bitcoin to a safer environment.
Just to be fully transparent, I personally have not worked with Unchained yet, at least, but I've heard nothing but really good things. And I know Stig worked with you guys in taking self-custody of his Bitcoin, and he had a really positive experience as far as I know. I personally use a hardware wallet to store my Bitcoin and think I have a pretty good understanding of what sort of attack vectors there are with that setup. But you're much more of an expert than I am when it comes to this. You do this every single day. What words of advice would you give to someone like me who uses a hardware wallet to ensure that the Bitcoin is actually secure? And maybe you could point out some of the common mistakes you see with people in my situation.
So first, I would say way better than keeping it on an exchange. Okay, so if you have a single signature wallet, much, much better than trusting a custodian or a third party. The biggest mistakes I see, however, with somebody who has taken a step to taking self-custody is still securing their Bitcoin using a single sig setup when multi-sig is so easy to use now and many multiples more secure. So doing it on your own can be challenging. You have to get, 3 separate devices. You're going to spin up your own node. You're going to connect to Sparrow on your computer. And that's just, you have to have a good technical understanding of what you're doing to create your own multi-sig. That's why companies like Unchained exist, right? Because we walk you through it in an hour or less, teach you how to do it. So first, excellent job getting it off of an exchange. Second, multi-sig is way easier than you might think. So just consider that. And I would have the same message for your listeners that if you have Bitcoin in self-custody, but it has single points of failure, like if somebody can find your 12 or 24 words and move your Bitcoin, that's a single point of failure. That's something that you should be concerned about. For multi-sig specifically, or for any type of setup, any type of self-custody, the biggest mistake that I normally see is making things too complex. So the security from something like a 2 of 3 multi-sig would come from physically separating the keys, meaning physically separate those devices, physically separate your seed phrases. So that means you can peel back a lot of the other complexity that people add with single signature type setups. That means like a long complex PIN, a passphrase. The passphrase is a single point of failure. You forget that, or if you type an L instead of an I, you get locked out of the hidden wallet. You get locked out of that Bitcoin. Adding too many keys, that's another one that might seem counterintuitive when you're thinking about security, but adding additional keys adds complexity and more physical items to secure, and it doesn't actually add any more security. So adding complexity without adding security, that's what you would do if you had, like a 3 of 5 type setup. And coming back to what we do at Unchained, if you did need a more tailored approach to something like a multi-sig 2 of 3, if you're looking at a 3 of 5 and thinking we have, this would be for, mining companies or larger organizations, enterprise level companies that have 15 people that want to be involved, we can actually give you a more tailored approach with having that 2 of 3, because you can go in and change your permissioning. We've recently introduced this granular permissioning where you can decide who makes changes to the accounts, who can author transactions, who can sign transactions, who can approve transactions, who's an owner, an admin, a viewer. So you have all of the functionality and capability of a higher M of N, a 3 of 5, a 5 of 7, with a 2 of 3 by just putting an intermediary in the middle that can help you do the view-only admin who can make changes type of thing. But I don't mean to criticize your setup. I think that anything in self-custody is good. I just don't want to see anybody lose any amount of Bitcoin. And single sig still allows for that if not handled correctly.
Yeah, you did mention a couple of really good points there. Obviously, the single point of failure is something you really want to be mindful of. If I only had one seed phrase written down and if I were to lose that seed phrase and I had no backups, then, I might have potentially lost access to my Bitcoin. You also mentioned the complexity piece. It's super easy to make this whole process too complex. If something were to happen to me, then somebody else needs to be able to figure out and sift through all this complexity if I'm not around. So I think those are both really good points. And you mentioned running a node. If I were to do the multi-sig setup myself and I were to work with you guys, how does the node piece work? Am I going to spin up my own node, or are you guys going to help out with that, or how's that work?
That's a great question. So a Bitcoin node is the way that you talk to the Bitcoin blockchain. So if you run your own node, you're able to verify your own transactions. You're able to verify your addresses, addresses within your wallet. Just make sure that you are not trusting a third party to tell you that the Bitcoin's actually there or the transaction is actually going to the right place. So it's part of that don't trust, verify ethos, running a node. Mm-hmm. With Unchained, you connect to our node. You can connect to your own node using something like Caravan or Sparrow with the wallet, the multi-sig wallet that you build with Unchained. So that's part of how we have completely removed the counterparty risk from the situation, is that every time you build one of those 203 environments, 203 multi-sig wallets, you can download what we refer to as a wallet configuration file, and you can store that securely. And anytime you want to interact with Bitcoin within that multi-sig wallet on your own with your own node, you can do that using something like Caravan or something like Sparrow. And these are just different multi-sig coordinator software that you can install on your own computer, connect to your own node, and then you can just exactly as I'm describing, transact in and out. You can look at your UTXOs, you can look at your addresses, you can look at your balance, you can send Bitcoin wherever you want, you can provide signatures. It's important to note that outside of Unchained, we're not going to provide a signature. Mm-hmm. So we can help you with a second signature within unchained.com. But once you go outside and do an external recovery, that wallet kind of becomes a 2 of 2, because then it's just a wallet built using 3 keys, but you only have 2 keys that can provide a signature or provide signatures to move Bitcoin. So we will never put you in a situation where we would potentially give a signature to you or anybody else outside of Unchained.
I also wanted to touch on the IRA product you guys have. Your team helps people purchase Bitcoin through an IRA, while most IRA providers don't actually have that as an option. Most brokers, you have to go to something like GBTC or MicroStrategy, which doesn't look good right now as the discount on GBTC continues to widen. How does the IRA product work that Unchained provides?
Yeah. Other than providing actual or having our clients hold actual Bitcoin, you mentioned GBTC. The discount to NAV is floating around something like 50% right now, which is wild. So that would be the main point that I would want to bring up. So the difference between an Unchained IRA and something like a GBTC or a MicroStrategy or any of these securities that you can purchase from your broker is that you own real Bitcoin. You own it in the same 2 of 3 that we've been talking about, where you hold 2 keys. We have 1 just as a backup. You have unilateral control over it. Now, you shouldn't be, taking distributions early or doing any of that, but this is the amount of control you have over Bitcoin in this type of 2 of 3 vehicle. So you hold the keys to it. Nobody can move it except for you. So the other benefit there is that we do the reporting on the back end. So that's something to think about. When it comes to Bitcoin and an IRA, and just in general, this is the only way that you can have something in an IRA that you hold the keys to. So I think I mentioned like digital bearer asset. This is the thing that you have unilateral control over. Nobody else can move it. Nobody else can touch it except for you. But you actually know what you own. So most of these 401ks are invested in, ETFs that most, I would imagine, your audience, a lot of millennials, most millennials feel very strongly about some companies, like an Exxon or, the oil and gas companies. I have no problem. I'm a fan of oil and gas, but some people would be horrified to learn that they are invested in their retirement account in some of these companies and industries that they don't, that they aren't very fond of. Mm-hmm. So that's something to consider too.
Well, David, it was really fun chatting with you. I really, really appreciate you coming on to the podcast and the show. Again, we'll have to reconnect at some point in 2023 as things continue to develop in the space. Before we end the show, where can the audience go to learn more about you, learn more about Unchained, and any other resources that you would like to share?
You can find Unchained Capital on Twitter. We're pretty active there at Unchained Cap. I'm on Twitter as well at DMLayt. That's DMLAYT. We have a YouTube channel where we post webinars and tutorials. We have an incredible educational blog and knowledge base on our website. if anyone's interested in jumping on a 15-minute consultation, you can schedule something with our client solutions or retirement teams. Go to unchained.com and sign up for a consultation right there. But yeah, the last thing I'd say that as a company, our goal is to put private keys in the hands of every individual and business who wants exposure to Bitcoin. I'd say anyone can do it. Everyone should do it. And you can reach out to us if you need any help with it.
Awesome. Well, thank you so much, David. I really appreciate it.
Thank you, Clay. This was a lot of fun. I'll come back on anytime.
What we do at Unchained is we make multi-sig and holding your own keys approachable and something that anybody can do. So I confidently believe this, that anybody can hold private keys. Anybody can hold the keys to their Bitcoin. It's not that difficult.